Okay, we're going to go ahead and get started on the next panel. This one focuses on a slightly different topic from the morning, and I think you'll find it quite interesting because it's a little bit diverse in terms of the group of people that we have joining us. Ven Authorities are institutions or entities that have the ability to build like vertical business lines or their own business models off the back of the Ven currency. And these are three of our partners that are working with us for developing some of these technologies. Right here is Pat Carroll, who's the chairman of Validsoft, which is a mobile technology and security company. Next to him is Chris Kelly, who is the CEO of SDKA International, which is actually a Dubai-based commodities company. And they're working in gold, they're working in diamonds and other commodities. And they have some pretty interesting applications for how they're working with Ven in the commodity sector. And then next to him is Tarver, who is actually Andrew Tarver from CAPCO and Bold Rocket. Bold Rocket is a really, really hot company here in London that recently was acquired by CAPCO, which was in turn acquired by FIS, which is one of the largest payment processors in the world. And through the relationship with Bold Rocket and CAPCO, there are some really amazing technologies that are being built for financial settlement and services that we'll kind of talk about. But I think beyond that, all three of these companies, while very diverse, are doing great things. And on the subject of new finance, they actually have a really important role to play in how we're reimagining some of these old lines. So the way that a bank would have had to deal with security, had to maybe be doing settlement for commodities and be thinking about the technology stack, each of these companies have kind of broken that out of a vertical, and they're applying it across the financial industry. So, you know, the subtext is Ven, but the main headline here is really what these guys are doing. So let's start with Pat. Tell us about where Validsoft is at. I mean, you were at the first Liquidity Summit 2 years ago, and the company was, you know, if you said multi-sig authentication to somebody, 99 out of 100 wouldn't know. Now I think a few more people do, but tell us about what Validsoft is doing.
Yeah, so I think the market has been quite dramatic in the last couple of years. If you look back to 2014, it's known as the year of the breach, or the year of the hack, and there's a reason for that. And fundamentally, the security architectures that we have out in the world today, we believe they're not appropriate to support the type of instruments that we're starting to see emerge. So we were very keen to get involved with Ven from the outset because we saw a demand based on absolute solid business cases for virtual currencies. And we looked at Ven in particular because it's quite a different type of composition to other cryptographic-based currencies. It's actually got a basket that underpins it, so you know it's got a tangible value. And we were keen to understand that in the areas where we saw the value for the business use cases, what type of security issues would prevail in those type of scenarios. And against that background, you have a world that's changing based on an increased focus on regulation. There is the need for absolute discovery around transactions. There's a demand and a need within the whole virtual world or the virtual currency world for anonymity. So you've got to find a way to be able to bridge that and use security architectures that are very complex. Don't get me wrong, very complex, but where all that complexity is hidden away. So if I give you an example, for example, I ask anyone here to remember, you know, a 24-digit alphanumeric code. No one here, perhaps unless you're a mathematical genius, will be able to remember it. But if I ask you to repeat using voice biometrics a number that's cryptographically generated, we can all do that. It's very simple, but that's an extremely complex type scenario where all the complexity is hidden, and that's cryptographically very, very strong. And we can take that type of model then, and we can overlay it based on infrastructure, where I have a personal device that might be my Apple Watch, a mobile phone or whatever, but in that domain where I create that trusted environment, I can build these layers that sit on top of it that create extremely strong security models, but where all that complexity is hidden. And that's the interest that we have, is being able to exploit that fully for the purposes of virtual currencies.
And so we're going to move on to the other guys for these introductions, but real quick, the focus of Validsoft is really on mobile, is that right? Or is it beyond?
No, it is actually beyond. And in fact, we've got deployments. I mean, our origins are in financial services. I'm ex-Goldman Sachs, and I was co-head of electronic trading at Goldman for Europe. Duncan Niederauer was my boss in the US, but you get to understand everything that there is about transactions. So we don't think about anything else other than transactions. In fact, our strapline is securing transactions. And that's how we think about it. Everything is a transaction. Your identity and how it's used and stored, there are transactions that are associated with it. They each have different profiles. And we fundamentally believe that the industry needs to change dramatically if we really want to create the momentum to make virtual currencies the success that they can be. We've got to fundamentally build in these security architectures into those business models from the outset, not as a layer afterwards, not as an afterthought. And that's the issue that we've had in the industry over the past several years, and that's the reason why fraud is at the level it's at today.
And I think we'll come back to the difference between blockchain security, which is its own thing for securing Bitcoin, and security in the transaction, which is a different type of layer. So let's move over to Chris now. Chris, in from Dubai?
Via New York, yeah.
Via New York. So tell us about what you guys are doing.
So I guess I'm here representing somewhat more the practical end of the cryptocurrency discussion in that we are a sort of, the TopCo is a junior resources company, and we operate in a very capital intensive environment. And the movement of that capital is actually very, very expensive for us, and it really precludes a lot of trading and smaller houses trading correctly. So from that point of view, it's very interesting for us to be involved with Ven and crypto world in general, because reducing the cost of the movement of capital in our industry is actually very important. And my other hat on here is actually with SDK Diamonds DMCC, whereby we're actually offering a more disruptive business model to institutional investors, where we are allowing the margins available in the commodity industry to be accessed via our structured trading platforms. And again, in a really competitive environment, if you can reduce the cost of moving capital around, you can then move that return on to an end client. So in that instance, we are very interested in being a very sort of early mover in the crypto world.
Right. And so the majority, this is a Dubai-backed company, and you guys are dealing gold and you're dealing diamonds, as I understand it, and creating funds around these?
That's right. What we've done is essentially engineer a way for institutional investors that are not in the commodity market to actually participate in the commodity market returns through direct physical ownership. And that's whether that's a sort of structured synthetic joint venture with us, where we're using capital to actually elicit trading returns, or whether that is in terms of physical ownership via a fund. And we're very disruptive in our own industry, and we love the idea of actually looking at the cost of the wire companies and moving money around the world and disrupting that as well, because it's very complementary to what we do. So a great example is we have two products right now. One is a gold product, as you know, which is a gold Ven coin, which is a hybrid of a gold asset and a Ven asset. And there's some interesting plays around that. We also have the Almas program, which is our sort of flagship structured trade program, which allows participation in the diamond industry to non-industry participants in a way that's never been done before. And of course, across the board, we are able to accept Ven just as we are any fiat currency to participate.
Okay, cool. Tarver. Bold Rocket.
Bold Rocket. So we do something similar but different. One of the major focus for us as a group of people is we've always worked in financial services, and you've always worked towards financial services clients. And actually what I've done is I've stepped back and said, what does the end customer actually want from financial services in the future? And given that financial services clients probably won't be able to deliver that because they don't have the agility, technology stack, etc., what are the alternatives to giving end customers what they need, potentially through new technologies? To put that into reality of kind of a few of the many projects we're working on, one is reward points. So all of us have lots of reward points. Most of us don't actually redeem any of those reward points ever. How do you create a currency around your reward, which will then completely disrupt most of the reward schemes which exist across the planet today? How do you actually create a value associated with that? Having that conversation, you then walk in and talk to the American Expresses of this world, etc., and the organisations that hold a huge amount of loyalty on their balance sheet, and they are scared to death of what that actually means to them in the future. And what we want them to do is think about their business model differently. Whether you be Avios, whether you be American Express, whether you be any business that has any concept of loyalty, actually putting that value back into the hands of a customer is what we're trying to achieve. can you achieve that more through the technologies we're talking about? Absolutely. Another, and you know, maybe a little bit more fluffy in terms of some people's belief, but my belief is that we're going to collect, and we're all collecting individually more and more digital data. So actually creating personal data as a currency. So, and thinking about actually how I use my personal data as a currency. There are lots of people and lots of very big organizations, some of the world's biggest organizations, making billions a day in profit out of my data, using my data to apparently sell me the right products, services, etc. that I need, when actually all they're doing is taking a very large markup on that and seeing that as being an advantage to me. So how do you take those two and many, many more end customer use cases and start to use new technologies, new currencies, etc.?
Yeah, and so Bold Rocket and CAPCO they're building technology for banks. So you guys work for the biggest banks and help deploy and integrate technology into those environments. Is that right?
Yeah, it's kind of, so for my sins, I'm a serial consultant. So I spent my life advising banks. So my first project was at Goldman Sachs on the electronic trading desk. So I spent most of my life designing algo trading systems. So I've got relationships with lots of banks. There is a massive intrigue and interest from banks about this new technology that's coming through, but there's also a huge fear, which you'd expect. I used to consult with consultants, so people who, from graduates through to expert, what I call posh contractors, which essentially can do a job on a day rate. What I'm doing now is Bold Rocket is a company of one, me, and what I do is I source startups that have the right skill set to deliver what a financial institution needs. So I don't want any employees. I don't want to wake up in the morning and have to staff people off a bench and sell them into work which actually they're not appropriate for, but I need to basically get them paid. What I do is find organisations, co-work with them and say, actually, you're building a product that satisfies their need, and I will represent that they don't screw you over and steal your IP, and I'll make sure that you solve a specific use case for their problem. And to me, that allows the startup to advance their technology without having to take VC funding, because they're getting institutional consulting fees. But it allows them to take their proposition forward at a pace as well. So it's kind of a symbiotic relationship, and there's reciprocity, which is good. But also from that, there's other things we're doing as a collection, a network of organisations to actually build some technology that will probably massively disrupt the people who are paying the bills in the end. So we call it the Robin Hood model of consulting. You steal from the rich to pay for the poor, to kill the rich.
Right. Okay. So we have three very diverse authorities here, and again, for those of you who came in a little later, Ven Authorities are entities or institutions which act like a federated network for developing Ven verticals and Ven business models. So we got security, we've got commodities, and we've got
something else.
Something else. like you could call that innovation, the innovation mode over there. There is a lot of talk about blockchain and how accessible blockchain is. We're using it with Ven in terms of our forward path and thinking about ways that we can grow and make things stronger. What are you guys building or thinking about with regard to blockchain right now, and how soon will it be here?
So just I think from our perspective, again, we look at it very, very differently, but some of the issues that we see with the blockchain today is the scalability issues. And wrapped around the actual technology itself is the fact that it's anonymous and there's no discovery in essence, right? Something is done, it's done forever, and that's it. We think there's a few fundamental issues there that we need to be able to address in order for that type of technology to be adopted widely and used widely. So hierarchical models we're starting to see evolve, models that are kind of moving away from the entirely distributed architecture into kind of a mixture of a centralized ledger in some places, depending on the type of function that's being performed, with a distributed aspect to it, which will create that ability for scalability. And then alongside the discovery, we find that there are technologies there. I mean, it's very, very interesting when you talk about people's identity. Actually, the people that's made the most money from exploiting people's identity over the past several years has been the fraudsters who steal your identity for nefarious purposes and then translate that back into card fraud or physical theft from your bank account. But as you start to get into a world that's completely anonymous, then you run the wrath of the regulators who want to have full discovery and want to know in some of the financial instruments trades, ultimately what the beneficial ownership is and who that is. So you've got to find that balance point and be able to do that in a way that makes me feel like my data is my data, I'm in control of it, it's secure, and it belongs to me. It's in a format that I have, I own, I can control. And I don't want to have to wake up like I am at present tomorrow morning and wondering about the Ven I purchase or the BTC I purchase and what physical device I put them on, and then having a failure on that device, so I've lost everything that I've put into that particular container. I shouldn't have to worry about that. I should have the capability to be able to ensure that from a security perspective, it's mine and no one can access it. That's outside of my control. And where I have it, it pervades that environment so that I don't have this issue about wondering about it.
But this kind of this centralized and centralized nodes on a decentralized model is what's funding Silicon Valley's.
Yes.
600 million went into blockchain over the last year. Coinbase just raised 75 million. But are those the kind of companies you're talking about that are doing that?
I think so. They're certainly out there. Again, we'd like people to sit back. When we've spoken to parties in the marketplace that we see as catalysts for helping to evolve the take-up of this type of technology, and I'll call it technology in the loosest sense, my fear is that it's done purely from a business standpoint. That's where it starts off. I see a model, I believe that this will disintermediate or creates a new opportunity, and I press ahead with that, not recognizing fully the implications, either from regulatory compliance purposes or from a technology perspective or from a security. If I build a model that isn't scalable, I'm dead. If I build a model that isn't secure, I'm dead. Right? So you've got to take these into account. If the regulator decides he doesn't like my business model because there isn't full disclosure or full discovery, I'm dead. So you've got to think these things through, and I believe we've been through the kind of the exploring discovery stage. Now is the opportunity to step back a little bit. Now is the time to think about, okay, what have we learned by this? There's huge momentum behind it. There's a lot of reserve momentum waiting to push this forward. We need to solve these fundamental problems. So it's good actually talking to some of the people that I've met here today that there is a lot of thought about how we're going to push forward. So Ethereum, for example, we had that discussion over lunch, very, very interesting. Again, looking at how we solve some of these fundamental problems. And we'd like to feel that what we're doing or what we can do to help can be a catalyst for the future.
I'm going to come back to the commodities in a second, but Tarver, what are you guys building? Like, what are these solutions? He's talking about you got to take a step back now and think seriously about what actually gets built and what the business lines are going to be. You guys work with a lot of banks. Where are you seeing interest? What do these bigger players want to see?
That's an interesting question. So, great example. 3 of the Bitcoin blockchain startups that sit in our space co-work with us. I always drag them into meetings with clients, so financial services, institutions, and generally at the end of the half an hour, we all agree that was a complete waste of our life. But it's an insight into what are people trying to do. So we met with one of the banks yesterday, one of the big global banks, and they have kicked off a incubator type program on level 39 to say we're going to basically go into blockchain 2.0, all this kind of stuff, just a statement. We asked them actually, what are you trying to achieve? And they had no idea. They basically just want to be seen to be doing something because it's a marketing ploy. And the audacity of their statement at the end was, and if you know anyone we can hire, we're looking to hire people as well to do something we don't know what we're doing yet. And we said, you're not going to attract
Sounds like a job for a consultant.
So I did say to them, as in, you're not going to attract anyone of any talent. You've got no purpose, you've got no kind of why behind what you're doing. And they said, but we are, and I was about to give them the name of who they were then. We are, and therefore we can hire anyone. And I said, you live in a fake world, which is, you'll get some people who are wannabes, but actually, they won't be able to do the thing you need them to do in the end. They will be charlatans. So that's an example of some organisations. There are others who truly are looking at it to say, so settlement. So transaction processing and settlement within an organisation is essentially what you need a ledger for. You want a ledger of all the transactions that go through. You want to be able to look at how that transaction, the history of that transaction, and you want to have the security around it. If you think about what the regulators are asking for, and whenever you talk to a financial institution, they will tell you what they're having to do. And what the regulators are very good at going into banks and saying, this is what you need to do. And all the banks come back and say, this is how we're going to do it. And it's like a to and fro of that's kind of doing, and they set off thousands of projects and spend hundreds of millions of pounds on it. If you go back to the core of what they're asking them to do and the why that's associated with it. There are three major tenets. The first is they want to create stability within the marketplace. They don't want to have the instability they had in 7 and 8. Second is they want to have transparency into what that organisation is doing, because at the moment it's just a set of reports that come out anywhere between T18 and T28 after a month end or quarter end. And thirdly, they want to have safety, security, and fairness towards end customers. They're kind of three things, whether you're doing the Basels, whether you're doing the suitabilities and the RDRs, etc. They're all kind of linked to those three whys. If you think about what the blockchain provides, it is going towards those whys. It allows you to have more transparency about what's happening around each transaction or the business unit itself based on the ledger that's there. It adds a layer of security. It will give the feedback of whether it's been fair or not towards the end customer based on a decision. So there are some opportunities that the infrastructure gives you that is hidden into the network of all these thousands of systems and applications that banks have today. And that simplicity will allow people to then satisfy the need of the regulator. In fact, the regulator can look at it itself. And this is what I always laugh at a lot of banks when they spend hundreds of millions on reg reporting or financial reporting programs to try and provide reports back to a regulator. The regulator should just do the reporting bit themselves and have one central place they can go and extract the information and the data. I think we're finding something towards that.
Is that a potential business? It seems like there's a real need for it. Is that a business that somebody could do?
Yeah, the thing about, and the frustrating part of the job I do is every aspect of a financial institution could be disrupted. So where'd you start? Is it digital identity? No bank is good at KYC, AML, source of wealth. They're all getting fined left, right, and centre for it. Start with that. It's a utility that needs to be provided. All the way down to financial transformation. Most banks are spending anywhere between 30 and 80 million a year on doing their financial transformation because their risk and their finance ledgers are separate. They're trying to merge them together. All the way from the beginning of the relationship to the end of the relationship at finance, there are stages that can be disrupted based on using something similar to blockchain technology. And that's kind of the financial institution. You then look at the individual and say, actually, the moment I press a button on Facebook and say, yes, you can have my data, and all those people who, in the last release of Facebook, pressed that, you're giving away all the information on your text messages, all the information in your contacts, all the emails that they can read, and they're looking at all that data because you've just given it away. Being able to have a smart contract of some form to say you can have this bit of data for this amount of time, for this amount of money, is where the future needs to go to manage personal data.
Yep. Let's take it into the dirt.
Yeah.
So there's a lot of talk right now about alternative assets on the blockchain or pricing commodities, say with currencies like Ven. We've done the first commodity trades priced in Ven. But there's an interesting intersection between those two things, which is to take assets like gold or diamonds and to back them with assets on the blockchain. So you kind of create a digital representation of the gold, but it's actually backed. And so there's a startup in Panama doing this. There's a couple others. What's your view on the relationship between commodities and these new technologies?
Well, I think it's actually a good segue into that because following on from the security element and really the sort of archaic nature of the banking system, the commodity industry is, if you can imagine it, more archaic in its practices than the banking system. So if there's ever an industry that is primed for disintermediation and for new technology to actually show value, it's certainly the commodity industry. How you physically move commodities around the world and how you physically move stores of value and funding is really where the blockchain comes in the future. Because believe it or not, currently commodity transactions can be executed by fax. Between intermediaries, people are faxing confirmations to each other, which is labor intensive, capital intensive, and it is the past. So where the future lies is, can we create an environment in which the security of the digital or cryptocurrency that is being used can match the security of the physical asset in a venue which is holistically secure, a platform or an exchange, where the blockchain represents both sides. And from the regulator's point of view, whether that's the SEC, the FCA, CFTC, they can then look top down and really turn what is an opaque industry into a very transparent industry where everybody knows where they stand.
So what does that look like? Does that look like an LME clear, or does that look like something that doesn't exist right now as a kind of, is it a marketplace or an exchange?
I think it would be interesting to see how the technology grows to represent that, because we, as I said, from our point of view, we're quite disruptive in our own way, in our own industry. But the nature of the disruption and the disintermediation that the blockchain can provide is so substantial that actually I couldn't comprehend it right now, other than to say a digital venue for a physical asset and a cryptocurrency to meet and be cleared in a sort of LCH manner seems a logical extension of where we're at right now. But that's certainly above my pay grade in terms of technological expertise.
How far away do you think something like that is?
Within 3 years. I think currently ourselves, SDKA, Gold Bullion International, one or two others accept either Ven or Bitcoin or another Ripple potentially for OTC transactions right now. The security element will have to come before the regulatory element in terms of businesses actually onboarding and being comfortable doing multi-million-dollar transactions over the blockchain. However, the fundamentals are there, and I don't know how that grows. But I think, as you said, the momentum is on the side. It's almost like a dam. And once the certain solutions are put in place, security and regulation, I think you'll see an inundation of applications throughout certainly the commodity industry and much more presciently the financial services industry.
Yep. I want to pull it out to questions here in a second, but I want to ask you real quick, with your diamond hat on, you guys represent a pretty good chunk of Dubai's diamond business in terms of trading. Diamonds are traditionally not tradable like a normal commodity, but when we think about new finance on the bigger subject here, how close are diamonds to being traded the way that we trade other commodities like OTC?
That's a really good question, because actually, because diamonds are not exchange traded, it creates inefficiencies and friction. And one of the things that technology should always do is remove friction from an environment. And so by being able to effectively deposit a representation of your inventory onto a digital platform that can be very easily sort of digested, understood, and evaluated, then I think that the flow and the sort of straight through process of diamond trading will be accelerated. For example, right now the Dubai Diamond Exchange, which is where we actually exit and provides our liquidity for our investors, that is a physical location where up to 12,000 buy-side participants have to physically come, and then they have to physically evaluate thousands and thousands and thousands of individual stones. Now, from the people in this room and from a technology point of view, whenever you see such a manually intensive, friction-full process, there must be several sort of wheels going around in minds right now where that is a process that can be simplified, can be digitized, can really benefit from the blockchain and the various iterations that will come from its current form.
Yeah, that's really, I actually think diamonds plus blockchain is one of the biggest unsung opportunities out there. Do we have some questions?
I have a question for Andrew. I'm interested in your idea of creating a product based around reward points. Because for sure, companies you have things like ABOs, they end up having a contingent liability on their balance sheet. But surely it's also in their interest for these reward points just to lapse and for consumers not to spend them. So how are you going to get them to work for you?
So that's exactly the challenge you'll have, which is every institution that has gone down loyalty has actually got an intention of you never redeeming that loyalty. So they're building a model which is based on, I'm going to give you something which actually at some point I'm going to take away without you redeeming. All we're trying to do is disrupt that model by saying, if I went to Avios now and said I want to basically create a value, I want to exchange my Avios points for the Ven, they'd say, no, you can't do that. So we understand that that's the case. I, as an individual, can say, actually, I will buy a seat for someone else and use my reward points. Now, that person may be able to give me a currency to do that, irrespective of what that currency is. So you have to find gaps and ways into getting the exchange working. So how can I now exploit the T's and C's of any reward contract to actually gain some value from that? So a flight to New York, economy, 500 quid. I can buy with 40,000 Avios points that seat. I know what the seat is, the mark-to-market of that seat on any given day, for any given flight, and I know what my reward points are required to do it. So I've got a value. How do you start to create a exchangeable value of something which companies believe are not exchangeable? And there are weaknesses in all of their T's and C's. And what we're going to try and do is, it'll be a horrific day when those big organisations realise that their balance sheet is starting to be attacked. But that's our money, that's our loyalty. You gave it to us. The consequences are quite severe.
But Andrew, there is an incentive for these big companies to join a platform like that, and it's called breakage, right? So can you explain a bit about why that would be valuable? Because if you can move your Avios into Ven on an exchange, the key thing is the exchange rate for that transfer, right?
Yeah. So there's an easier way, which is the kind of the nice, friendly way, which is be part of the program, do an exchange model, create it into a currency that then can be used to do different things. But the way I antagonise the big organisations is by saying if you try and fight this, there are already loopholes within your system, which means actually I can get the value out because I can buy something with your reward points and then sell that to someone. But what we want to try and do is say to people, actually create a currency around this, create something that allows me to move that value around. And I always laugh. People always say to me, I've got no money, and I say, well, you have. You've got 3 racing bikes. You've got a set of golf clubs, you've got a toaster, a kettle, whatever, sell them. And they're like, okay, I can do. And it's really easy to be able to get the value of those things. It's called eBay and Amazon. So everything is a marketplace out there at the moment. Just think about everything you've got, from personal data to reward points to the toaster in your house. Everything has a value and everything has an exchange. And actually what you want to try and do is simplify how those things are valued. As in, put it into one currency or a set of currencies that actually if I decide my life is going to be associated with the Ven, then actually I can put every single thing I own into one currency if I want to. I can have multiple currencies. It's just creating that flexibility within a marketplace and removing some of the friction is all I'm trying to do. And trying to get less open-minded organisations to be a little bit more open-minded about how that's going to happen by either saying you'll be destroyed if you don't do it, or you can come on a journey. Great. And that's a bit of fun.
Question? We'll go to the back and then
follow up to the last comment. You said multi-currencies. Do you think each of those currencies will have their own blockchain, or would it be one blockchain will prevail?
I would hope they don't each have their own blockchain. Then I wouldn't see how that would make sense to me as an end customer. But I'm agnostic, as in I'll leave that to the tech geeks.
I think on the blockchain point, you need mining breadth for a currency to be successful, which is why you see a lot of the altcoins, there are thousands, but people aren't buying them. Bitcoin in and of itself, because it's so large, has the mining depth to be able to do that. The side chains are coming, which will enable some more flexibility, but the next panel probably could really talk about that in more detail. Likely, I don't think you're going to see millions of blockchains, but I think you will see lots of different asset values running on various technologies. Another question? I think there was one up here in the front.
Well, it's just one for you, Andrew. Essentially, you talk about the transferability of reward points, which I think is quite interesting. Yes. So you talk about the transferability of reward points. The thing that I'm questioning is there really a business case for me to have my points in the wild to be redeemed by people who are not even linked to my business and generating money for me in the first place?
Well, it depends whether you call them loyalty points. So I think, no, but I think that's why we call it reward, not loyalty. I'm being rewarded maybe for loyalty, but a lot of companies call them loyalty points and therefore expect you to redeem them with them, because that's part of the loyalty. They want you to use those points to keep you in business with them.
So just to come back on, you do have programs out there where you get rewarded and you can redeem those with commercial partners. I'm just thinking, I'd rather put points to either labs or that I redeem, or the Avios or anything else by my existing customers rather than being out there in the wild, because that's money coming out of my balance sheet. So I'm just wondering, really, what's the incentive for a business to open up a points program to people who are not customers?
I don't think there is a point. So I'm not looking at this from the corporation's perspective. I'm looking at this as a value. So I have got points, whether I've got Boots points, whether I've got Avios points, whether I've got Nectar points, it doesn't really matter, I've just got points which are worth something. And actually there is a closed system at the moment of how you can use those. What we're trying to say is actually open the system up more and then have an ability to be able to redeem those within a trusted community. So at the moment there's a lot of restrictions around what you can use and how you can use it. How do you actually disrupt that as a model? And using some of the new technologies to potentially do that.
Again, going back into the rewards, scheme.
Which are diamonds.
You're saying that in the case of Avios, for example, they eventually, they are not interested, they are not keen, and then you're coming here to disrupt the business. I mean, at the end of the day, if I understand correctly, Avios, the only thing they want is to sell Avios, because they make money. I give you an example, British Airways partner, Iberia. Iberia cards in Spain, they buy every year 20 million euros worth of Avios to the other company in the group, which is Avios. And they actually buy it up front. So regardless of the amount of Avios they're going to distribute to their clients, they have to spend 20 million euros. And then if they don't sell them, they eat them. Now, the model of Avios is to make money. And they make money from Iberia, they make money from American Express. American Express pays hundreds of millions of pounds to Avios to buy Avios. So I don't understand, if you are a company, if you go, I give you an example, we have an agreement with Avios. People who have Avios can buy gold. Why? Because I am buying Avios, and then I distribute them to my clients. So it's all about economics. If you go to Avios and you say, how much do you charge me to buy 10 Avios? They will surely have that agreement with you.
Yeah, that's breakage, right?
Yeah.
Yeah, the key is what's the price, right?
So
All they care about is selling Avios. And if you give them 10 million pounds, they will allow you to buy whatever. To say, okay, I'm going to buy you 10 million pounds every year, but I want my clients who receive Avios for a product also to be able to use Avios to buy my product.
Yeah, I think, so my only response to it is the questioning is around the corporate view of Avios points. I'm looking at this from an end customer perspective, which is I have personally 1.9 million Avios points. I don't use them because I'm not allowed to use them on the flights that I try and use them on. So I want to sell them and I want to use them on things I do in my life. I want the value out of it. I want to put it into a currency that is tradable.
So if you can actually use your 1.9 million Avios to buy 200 grams of gold, you do that. And then you can relieve your gold into cash.
Could I jump in?
Yeah.
I think the point here is actually about price discovery, and price discovery in this conversation is really dictated by the value of the asset to the buyer on the day. So from a structural point of view, obviously there are a lot of ways in which I think these blockchain technologies can really make that transparent. To go back to the gold scenario, gold is an exchange traded product. So you have price discovery on the one side of the trade. How that then translates to the value of the Avios or whatever else they are, is something that is determined by market forces. And that is where blockchain technology can really create price transparency and discovery across both sides of the trade, buy and sell side.
So we need to wrap this up. I want to ask you guys just as a last number, 3 years out, how much Ven volume do you think that you might have? What's the top end of the Ven volume you think could be running through your particular networks?
Should I go first? Mm-hmm. I think there is no reason why a substantial amount of the wholesale commodity business, and from our perspective, certainly the structured trade business, 50-60%, so several $100 million a year. It could be traded in Ven in physical commodity trading.
There is no exchange for loyalty at the moment, so the marketplace is open if you look at the size of the loyalty market.
6 billion, I think.
Yeah, personally, I think it could be huge, as providing that we solve some of the fundamental issues. And I'd like to feel that, looking out 3 years, that the fraud component that makes up what we classify as percentage of fraud relative to trade today is so minuscule that it won't be a retard for the continuous development of this type of activity going forward.
Great.
I think we're some way from that.
Thanks, guys. Thanks very much. Coming up next, we have my good friend Patrick Merck, who's the board member of the Digital Asset Transfer Authority, a really interesting Washington, D.C. based organization that is working on standards and best practices for digital assets, which include Ven and Bitcoin and Ripple and a whole range of other things that are in development. So Patrick is leading a conversation on specifically Bitcoin and some of the top, most interesting Bitcoin companies, Mirror and BitNet and one other, which is escaping me. So Patrick, if you're around, there you are. Come on up. And I think we have Avish.